welcome to another episode of our podcast. And today my guest is J.P. Laporte from INTEGRIS Pension Management Corporation. INTEGRIS Corporation provides PPP, personal pension plans. And, I'm just doing a little bit of research, JP, for our discussion. I learned so much about this PPP stuff. There's so much articles you've written on it. There's so many, interviews I saw that you've been writing on this for so many years. I saw your interview with the CDTV, with the code, and also on a BNN. A lot of stuff been published on that. So before we get into, if you can give us a little bit of background, how do you get into all this stuff? What you were doing before that? If you just walk us through, where you grew up and how you got into this stuff.
Sure, my pleasure. So I'm a pension lawyer, and I started on Bay Street working with large pension plans, multi-billion-dollar pension plans that had all kinds of legal issues. Of course, lawyers for those. And I quickly realized that, unfortunately, in the small private sector, companies with, let's say, 10 to 500 employees, owners were not getting any pension plans. They were they had to find other ways to save for their retirement, usually the RRSP.
Yeah.
And so I decided that maybe it was a good idea to utilize my knowledge of pension legislation that I was using for very, very large clients and boil it down and miniaturize it so that the little guy in the private sector could have the same quality of pension as a civil servant or a teacher or a unionized worker. And so that's how I pivoted from being a pension lawyer on Bay Street to starting INTEGRIS Pension Management and doing these personal pension plans for business owners.
Got you. So you've been doing that for since 2014, 2004, 2005. How long you been in this path, John?
Well, I've been in the world of pensions for close to 20 years, but I've been the CEO of INTEGRIS for the past 8 years.
I got you. So how's that been working? I think the big part of that is that a lot of our business owners like myself, we're just not aware of a lot of the, what's available in the market. So education seems to be a big part of it. What you work. So how does that work? How do you guys provide that education for people?
Yeah. So we've tried many different things over the years. At first, we spent a lot of times one-on-one with business owners. And then they said, I'm too busy, talk to my accountant. So then we start talking to their accountants. But then the accountants were saying, well, if I don't make any money pushing this, I don't want to hear it. So then we start talking to their financial advisors. And the financial advisors do get paid for managing the assets of the plan. So they were a lot more receptive. And so they're the ones that would go back to the client and say, hey, we should upgrade you from your current RRSP that you have with me to a personal pension plan where you can double or sometimes triple the amount of tax savings that the RRSP gives you. And then we realized that even speaking to financial advisors wasn't enough. So we put together a course with an educational establishment based in Winnipeg called the Knowledge Bureau. And we put a course together that advisors, clients, accountants, anybody from the general public can take and really get up to speed on all the tax advantages that pension laws provide.
So what are some of the key differences between RSP or pension, from looking from a business standpoint, what are some of the key differentiator between these two plans that, that we can get from bank to RSP and compared to yours PPP plans?
Yeah, well, you can get a PPP from your bank as well. There's a bunch of banks that do it, RBC, TD, Scotia, National Bank, they all have the PPP. But the big differences are, well, mainly the problem with the RRSP is you only get one tax deduction. It's what you contribute in the year. That's it. With the PPP, you get 7 tax deductions instead of 1. So
in 1 year?
Depending on, so sometimes you have 3 or 4 in a single year. But every year you're allowed to put more money than the RSP maximum. So for example, if you are 50 years old you'll be able to put about $34,000 in a PPP, but the most you're allowed to put in an RRSP is $27,830.
So
So
it's
right away,
almost.
that's just this year. Then you have an ability to contribute money if your business paid you a salary in prior years. That's a past service contribution. And then if you invest the money very conservatively because you don't trust the stock market, and you say, you know what, I don't want to take any risks, I'm going to invest in GICs, right? Well, because the rate of return on a GIC is so low these days, that's going to create a deficit inside your pension plan. You're not growing at the speed you're supposed to. And what happens is that gives your company an ability to make an additional tax deductible contribution that we call a special payment. So now you're throwing even more money into your plan and claiming even larger corporate tax deductions. The investment management fees that you pay to your broker to manage your PPP assets, in an RRSP, you're not allowed to write those off. But in a PPP, your company is allowed to write those same fees off.
Wow. Okay.
So the cost of investing your money goes down because you're claiming larger tax deductions along the way. And then there's a whole bunch of other deductions I won't get into. But that's another call coming through. So that's the essence is that it's not a fair fight. You have one deduction with the RRSP and 7 with the PPP.
Wow, you can increase your wealth in a very short time with the PPP plans, compared to RRSP plans. If you look at from that angle. Yeah,
you can double or sometimes triple the amount of tax assistance that the government is willing to give you in building up a pension plan over what you can do with an RRSP.
So why not all the business leaders or business owners, small businesses not getting into that? This is no brainer. It looks like there's so many benefits. Why not all that local Canadian business owners not going after this?
Because it's an extremely fragmented market. It's very, very difficult to find one cost-effective way of spreading this message to all the business owners, right? You have to go and knock door to door to business owners and say, hey, what do you think of that? And most people will say, I don't like traveling salespeople. I don't want to deal with you. I'm busy. So, it's a very, very difficult way of breaking in. If an association like, I don't know, the Canadian Federation of Independent Business, the CFIB, if they put our product on their platform, then we'd have 125,000 business owners all learning about it on the same day, right? But if you don't have those kinds of connections, it's hit and miss. It's who you know, and that's why not everybody signed up yet.
So in a journey for any business leader, when you start business, all by yourself. Most of the small businesses, they consultant. What point in time in their business, JP, they start thinking about these plans? When they are and they don't have any employees. They finally got 1 employee, 2 employees. They start adding employees as they grow business. The revenue grows. What point they should start thinking about these plans and start using this their kind of savings?
Gurmeet, remember, this is not for the employees. It's only for the owner. So whether you have 1 single employee yourself because you're a doctor and you've incorporated your medical practice, or you're a widget manufacturer in Aurora and you have 500 employees, it's the same decision because you're the only member that's going to go into the PPP.
Gotcha.
Yeah.
Do you, as a business owner, as an employer, do you have an option to extend this to your employees as well if you want to?
If you want to and you have the money, yes, of course. And we have some clients that are looking into that because they want to give their employees a much richer benefit than what is currently available out there with group RRSPs.
Because if when I was in a government sector, they have OMERS. Those plans are very lucrative. Very good plans. Everybody wants to stay there because they have a good pension plans. if the business, private sector, if the business leaders have the same opportunity to provide that for their employees, that could be a point where they keep retention. For their staff.
Yeah, exactly. I mean, what we've done with the PPP is recreate a mini OMERS.
Mm-hmm.
So that very rich pension plan that you were used to, we have that available for our clients.
I see. So what has changed with the COVID, for the last year and a half, what's going on with the other COVID stuff, JP, in your minds? What changed, what impact in your industry? How do you see the whole, what happened?
Well, COVID has really helped us as a company in many ways because, again, I was telling you about how difficult it is to talk to 1 million business owners about this solution.
Mm-hmm.
In the old days, before COVID, people expected us to get on a plane and fly to Vancouver or Calgary or wherever and spend the day or spend an hour at their office so they can meet you to explain the story, talk about those 7 tax deductions.
Yeah.
Nowadays, I can record a video, post it online and email it to people. And instead of talking to one person, I'll be talking to 10,000 people for the same amount of effort without having to pay the air flight and the hotel and the restaurants and the taxis and the car rental. So my costs are dramatically lower. The number of people I'm hitting is exponential. So the fact that we're forced to use video conferencing has really, really helped our business. I
see. And do you see that stay the core in a longer run as well? Or it's going to go back to the personal meetings? And what do you think?
I mean, we'll do both. We'll accommodate people who want to see us in the flesh, but for those who just want to get the brass tacks, they want to know what the advantages are and the disadvantages. We'll just say, go on our website, click on this video, and you've got it. Or download the memo and send it to your accountant or to your financial advisor. We're not going to do as much of the heavy lifting that we used to.
And talk to us a little bit. It looks like I was just doing research. It looks like you are developing university courses as well. You tried teaching on this these PPP stuff. If you walk us through, how's that working out and what's involved in those courses?
Yeah, so we've got what we call the INTEGRIS University. It has 6 courses available, and the primary course, the most important course in our mind, is the course on PPPs, on personal pension plans, and it's an online course, so people have 3 months to complete it, and they can ask questions. There is an interactive screen that allows you to type up questions for the instructor. There are 11 chapters to the course dealing with different aspects like taxation, creditor protection, investing, and so forth. And then each chapter has its own quiz to test your knowledge. And then at the very end, there's a final exam. And if you pass the course with a certain grade, then you get a certificate. And I believe 30 hours of continuing education credits as well.
Gotcha. I see. So you get involved in those teaching as well? It's just all online, interactive?
It's all online.
People can do?
It's self-study. It's all online. So I don't personally have to teach the course. I mean, I was one of the 2 instructors that wrote the materials for it and all the quizzes. And I answer questions when people have questions, when students have questions. But there's no actual lecturing going on because it's all online.
Gotcha. So a lot of business, owner leaders this time of the year, JP, they are looking to, do their planning for the rest of the year. They are looking to, how they're gonna, have a comeback in 2021 on the revenue and the growth, and they are, leaders I'm talking to, they are looking at different avenues to generate revenue again, to get that growth, again in a business after this COVID, calms down a little bit. What advice would you give? Like, how should they plan your PPP into their business planning and or business strategies? So what they need to look for. How can they prepare for this?
Well, one of the things that a lot of business owners focus on are ways to generate new revenues. which is important, but revenue is only part of the equation. The other is reducing expenses, because it's the interplay between the revenues and the expenses that creates the profitability. And at the end of the day, profitability is what's most important, not revenues. So the PPP helps with reducing the expenses, the tax expense. Because what we're saying to business owners is, you have a choice. You can cut a real big check to CRA, or instead you can put it into your pocket through your personal pension plan, and you'll have that available to you when you decide to move away from your business and retire. So that's a way of reducing the tax burden and converting what would have been taxes, converting into retirement savings.
Gotcha. So when you're putting the money away, JP, in a pension plan, can you, if you don't want to move away from business while you're in a business, can you use the money to reinvest into business? What kind of ways can you take the money in a short term or long term, and can you invest some of the money back in business?
Well, there is a prohibition under the Income Tax Act where you're not allowed to self-deal. You can't take your pension monies and then go and buy shares of your own company. That's prohibited by the Income Tax Act. However, if you contribute money to your PPP and then 6 months later there's an emergency and you're scrambling to get money, you can go back into the pension plan and withdraw it. You can reverse some of those contributions to deal with your emergency. So there is a mechanism to at least have access to that pool of capital in an emergency, for example.
Was COVID one of the emergencies that a lot of people, if they had done PPP before that, COVID, they were able to get some help during the COVID? Was that considered one of the emergencies that they could use, or is it just has to be some business emergencies?
No. What has happened is that the law has changed. So prior to December the 8th, 2020, when you contributed money to the pension plan, at least in Ontario, you weren't allowed to take the money back out until you retired, unless there were some other emergencies, and they're very rare. COVID was not one of them. But on December the 8th, 2020, everything changed in Ontario. The law now says that if you set up a pension plan through us, and you're the owner, those rules that immobilized the money, that locked in the money inside the plan, are no longer applicable. So it's no different than putting money in an RRSP and then 6 months later doing an RRSP withdrawal.
I got you. Okay. So you could use the money to whatever, the immediate needs you have to get over, and then put the money back again. Is there a limit? How much time do you have to put the money back again if you take the money out, like RRSP?
There's no rules like that. No.
Okay, good stuff. So so business leaders who are preparing for 2021, they can start building some of that stuff. Same for employees as well. So if they're adding more employees or they're letting go employees, they can scale up the same way that, for if they're planning for this year.
Well, if you're putting employees and these employees are not connected to the business, either they're not family members or they don't own any shares in the business, and you have to at least own 10% to be exempted from all those rules that we were talking about. So for your regular employees, your rank and file employees, the rules are different. It's a lot more restrictive. You get all the tax deductions we were talking about, but you don't have that same flexibility to go in and reach out into the pension plan and take the money out in an emergency. You lose that flexibility when it comes to your employees that are not shareholders or family members.
I see.
It's not quite the same treatment.
I see. So when can they take money out on a retirement, or how do they take the money out eventually?
Well, in a normal pension plan, the employees take their money in a number of different ways. One is when they terminate employment, they have what's called portability, so they can take their money to a locked-in retirement account, a LIRA. If they retire from the business, they have the option of asking for a pension, so they get paid out of the pension plan an annual, just like OMERS would pay a pension to its retirees. And then if the company decides to wind up or terminate the plan, there's also an option to go and buy an annuity from an insurance company with the money that's sitting in the pension plan, and that annuity will pay the annuitant, so the plan member, the employee, will pay a monthly benefit.
I got you. And what are the ways, JP, if you walk us through, how do people get that? Contacting you is one of the options. But I saw recently news that, is that possible the banks would also offer, PPP plans as well? Or is it they have to go through their financial, advisor, whoever's to get these PPP plans?
Well, there are many ways to get to a PPP.
Mm-hmm.
One is through your financial advisor. One is through your accountant, who will then connect with us. Or you can come directly. If you come directly through our website and you say, I'm interested in a PPP,
mm-hmm.
then we will contact the interested party and
mm-hmm.
walk them through how it works, do illustrations, show them the advantages, and then ask them questions. We'll ask them, how do you want your money managed?
Mm-hmm.
Do you want to go into real estate in the United States? Do you want to go
mm-hmm.
into GICs in Canada? What do you want to do with how do you want to manage your money? And then we will,
mm-hmm.
If they don't have an advisor, or if they don't like their advisor, we can pair them up with advisors that have been doing PPP business,
mm-hmm.
and then they can do their due diligence and say,
mm-hmm.
interview them, research them, and say, yep, this is the person I want to manage my PPP assets.
Gotcha. And how's the footprint? It's not only Ontario. You guys provide, the service all over Canada. How big is the footprint?
Yeah, we're across Canada. So we have clients stretching from BC all the way to Newfoundland,
mm-hmm.
and even the Northern Territories.
Mm-hmm.
So just this week, we had an accountant from the Northwest Territories asked to set up a pension plan. So we can accommodate all Canadians who are in business and who take a salary from their corporation,
mm-hmm.
if they're under age 71, of course.
Gotcha. And give us a little bit idea how many businesses have you been helping? Over the years, approximately how many, across the province. How big is that? The clientele. How many people you've been helping?
We've got about 400 families that we've been helping so far.
Beautiful.
Across the country.
Mm-hmm.
A lot of them in Ontario and Quebec, more and more in BC.
Mm-hmm.
So it's kind of representative of the population.
Okay.
Yep.
Is there so what happens? Another side of that, I'm looking at from other angle, that if it says it seems so good to what you guys doing. So if it gets so big, would there be a risk that government will come down and shut it down? In PPP, or what would happen if this plan gets so big?
Well, that's always a risk with anything.
Mm-hmm.
Look at what happened with income trusts back in the late 90s.
Mm-hmm.
But we are only representing 2% of the market. So I think we've got a long way to go before this becomes something that big. But anyway, remember that the legislation that we use to put together the PPP is the exact same legislation that the governments use for their own employees, that
mm-hmm.
teachers use, and that unions use for their unionized workers.
Mm-hmm.
So if the government were to attack that legislation because they don't like INTEGRIS and they don't like the PPP, they would have a lot of constituencies upset that someone is trying to destroy their pension.
Mm-hmm.
Because it's the same law.
Mm-hmm.
We don't use a separate kind of law for the PPP. It's the same law that we use for a big plan like the teachers plan or OMERS
mm-hmm.
and the PPP. The same legislation.
So that falls under the same legislation, no matter which plans you look at.
Section.
And that.
Yeah, it's section 147.1 of the Income Tax Act.
I see. Yeah. So in order to, they have to change a lot of things in order to, okay, good stuff.
And Gurmeet, there's the other thing too is, what do you think? How do you think that would look if they said, listen, for our own people that are in the public sector that have job security, we can have these pensions, but you guys that are in the private sector that are paying taxes and that are taking all the risk, you're not allowed to have the same thing that we're having.
Mm-hmm.
I don't think that would go over well with a lot of people.
Yeah. But a lot of people just not aware of it. That it's possible for them to have the similar, the plans at the moment, until you get so big, I didn't know that, until I met you, that, it's even possible to have those kind of almost pension plan, even in private business.
Yep. Yeah.
Okay. And where do you see the next few years, JP? Where are you guys heading, in terms of company, where you, obviously COVID brought a lot of uncertainty in the market, but what do you see that in the next couple of years?
Well, it's hard to predict because I don't know how much damage this virus will do, but we've been very lucky in that a lot of our customers are part of what I call the core economy.
Mm-hmm.
So the core economy are the things that always run, whereas the fringe economy would be like your travel agent, your tourism boutique, things that are discretionary spending. And that people might cut, the first thing they cut when they feel threatened. They say, well, I don't need to go on a vacation. I don't need to do all these things. So that's what I call the fringe economy. Our clients are not in the fringe. They're all in the core. So we haven't really seen any impact. But of course, if this continues, even the core might get frittered away and eaten up by this situation. So it's difficult to tell, but one of the things that's really important to know is that with all of the emergency spending that the federal government is doing, billions of dollars of taxes are going out to help people. The government's going to need to raise taxes eventually, or else
that is the only way.
Or else the country will go bankrupt. So where are they going to raise those taxes? Are they going to go to the welfare recipient or the student that's on a student loan and ask them to raise taxes? Or are they going to go to your clients?
Businesses.
They're going to go to businesses and they're going to say, you guys make money, you can afford to pay more taxes. So what we say is, hey, if the government increases the tax rate, does it really matter? Because you're putting the money in your pension plan.
Yeah, that's a great point. That is definitely the outcome that government has to make up for all the money they've been giving away is increased taxes, and it's opportunity for business leaders to simply say, I already have a plan, so let me put some more money into it and not give it back to government.
Yeah, that's why business owners should sign up now so that when taxes go up, they can say with a straight face, I put this plan in place before taxes went up.
Okay, so they can't even touch. Beautiful. Yeah, that is a great point. So business owner, who planning their strategy or they're planning for 2021, that's the first area they want to look at. That as the taxes goes up, how I'm gonna manage my taxes. That where do I put the money to protect?
It's a way to protect you and your business. The other way that I think a lot of business owners don't know because no one's told them is that when you die and you have an RRSP or a tax-free savings account or a registered income fund, what happens if you die with your spouse, or let's say you don't have a spouse, your spouse already predeceased you. What happens in Canada is you get what's called a deemed disposition. So under the income tax rules, you're deemed to have sold everything in your account at fair market value, and then you have to pay tax on the growth. So what happens is a massive amount of money leaves the account, and then your beneficiaries, like your children, only get what's left. And in some cases, that may be 50% of the money disappears. So that's not a good result for RRSPs and TFSAs and so forth. But with a PPP, if your children are employees of your own family business, and if you had the foresight to make them plan members alongside yourself, if you pass away, instead of being taxed, the money is not taxed and now becomes available for the children, for their pension.
I see. I get you.
So you pass the wealth from one generation to the next. You don't have to give half of it away. That's another way in which INTEGRIS protects our clients when they die, because COVID, you can die from COVID.
Especially if so many unfortunate incidents happen, you could protect it that. Great point. How about, that brings another point, JP, that, there's a lot of, businesses are changing hands during this COVID stuff. M&A stuff is a lot, merger and acquisitions, businesses are selling, or they're partnering with somebody else. So when people sell business or they buy business, how does this impact any shape or form to for business value standpoint, that increase the business value or lowers it? How does this impacts in that transition?
Yeah, no. So thank you for raising that, because that's yet another example of how the PPP adds additional value on top of everything else we've been talking about.
Mm-hmm.
When you're talking about a sale of a business,
mm-hmm.
because pension plan allows you to transfer corporate dollars into your own personal pension plan.
Okay.
Let's say your company owns real estate.
Yeah.
And your business bought the real estate and depreciated the cost of that real estate. So you paid $1 million for the building and you depreciated that cost. And now the market value is $5 million.
Okay.
And you sell it, your company, who's the owner, sells it for $5 million. So what happens? Well, number one, you have what's called a recaptured depreciation.
Mm-hmm.
So all that depreciation you claim, now you have to pay tax on it. And then you've got a capital gain from the $1 million you paid to the $5 million you're getting. There's $4 million of capital gain, so you have to pay tax at the corporate level for that capital gain as well.
Mm-hmm.
So you're not going to get the full $5 million that the buyer is bringing to the table. You're going to get a fraction of that. Now, if you had a PPP, your corporation could take some of the $5 million and dump it into the pension plan to create a corporate tax deduction. So you end up, instead of paying it to the government, you're putting it in your own pocket.
But can they put the money just after the sale, or it has to be over the time? They cannot just do it in one transaction. No. I'm going to put that much money in.
So there are opportunities to do lump sum contributions to the PPP. And I've already alluded to one, which is what we call the past service contribution. One of those seven extra contributions. So one of them is past service. The other one is called terminal funding. Okay. So that's, if you decide to turn on the pension, the laws allow the corporation to write a massive check to your own pension plan. And that amount, I've seen it go as high as $2 million.
Yeah.
So $2 million of that $5 million that came in from off the street, the buyer of the real estate, $2 million goes into your pension plan. So the company claims a $2 million tax deduction.
Yeah.
So now it's not paying tax on $5 million, it's paying tax on $3 million.
$3 million, yeah. You brought it down.
Oh, it's not quite $3 million because its capital gain is 50% inclusion, but that might change as well with the new rules coming down. But so you see, even in a sale of a business, we have ways of mitigating or reducing the tax bill to the business owner. The other situation, Gurmeet, that might also apply, we talked about a sale of an asset like the real estate. But what if you want to sell the shares of your business, right?
Okay.
Well, if you want to trigger what's called a lifetime capital gains exemption, which is over $800,000 now, means on the first $800,000 of capital gains you make, you pay no tax. Well, the only way you can do that is if the company whose shares you're selling, that company has to be purified. It can't have too much passive assets in it.
Okay.
So what better way to ensure that this takes place than by having a pension plan and transferring money? Let's say that terminal funding I was talking about, the $2 million, transferring that into your pension plan. That makes your company pure. So now you qualify for the extra $800,000 lifetime capital gains exemption.
Yeah, that makes, for the owner, if you're trying to sell the company, that increases business value quite a bit, because now you have a lot more solid plans, instead of just sitting on the money that you're gonna lose if you buy that.
No, nobody wants to buy cash.
Yeah.
If I'm a buyer of the shares of your company and you tell me I have $1 million in a bank account, I'm like, I don't want to give you an extra $1 million just to buy $1 million.
Exactly.
I want to buy the assets. I don't want to buy the cash. So why not take the cash out, put in the pension plan, and now you can reduce the value of the acquisition, so reduce the cost base. There's all kinds of positive spin-off effects.
There's so much flexibility built into a PPP plan. No matter which way which angle you look at it, from a business sale point of view or operational standpoint, there's so much and the flexibility built into. Was that intentionally built into? It just happened that way because of legislation, JP?
No, it was deliberately put into the design because I figured, well, I can do whatever I want. I'm designing the plan. So I looked at everything that's possible and I said, let's throw it all in there. Let's make it all available to our customers. Like, for example, pension income splitting.
Okay.
So imagine that you've got a PPP and you got a spouse that stays at home, no income. And the pension plan promises you in retirement an annual pension of $169,000.
Okay.
If you're in Ontario, you're going to be paying about $55,000 in taxes.
Okay.
But if you split that income on the tax return of your spouse, you only pay tax on half of it.
Okay.
The spouse has to pay tax on the other half. Because both of you are on a lower tax bracket, well, you are definitely, she went up the tax bracket. Then as a couple, you're going to be saving $18,000 every year in taxes. Every year, you're saving 18 grand.
I see. So the money you
life, because you split the income and you dropped into a lower tax bracket.
Yeah. So the money you're putting in, it's money you're saving. It's not even the same. There's so much saving in that. It's a fraction of the cost, but money you're putting away.
Well, it not only does it cover the cost, it generates brand new money you didn't have before. It's a cash flow positive solution. It covers all the costs and gives you extra money, extra spending money. And people don't understand that because they say it's too good to be true. What's the catch? And I say to them, there is no catch. That's the way the law works. If you understand the law, you can take advantage of those rules. But if you don't understand them, if you've never been exposed to them, then you'll be in an RRSP like everyone else. Yeah.
Well, there's so much to learn about this plan. There's so much flexibility built in. For business owners, I would I would say I would recommend for every business owner they should spend time with you and learn a lot more. Please spend time with you and understand how many options they have to go with. Where can how do people get more information at JP? I know your website has a lot of information. If they want some more information, how do people go about getting some more information about this?
Yeah, so when they go on our website, they can just go to contact us and send in a request to speak with someone.
Okay.
And then we'll have one of our salespeople contact the client or the potential client, or maybe we'll talk to their accountants. We can be introduced to their accountants, to their financial advisors, because a lot of business owners are too busy with running their business. They don't really want to learn all this stuff. They just want to know that it's legal, that it's available, that there's no catch. That's what they want to know. They don't really care about all the 7 different deductions. So the best thing is to connect us with your service providers. Let them do the due diligence for you. And if they come back and say, yeah, we checked it out and it's squeaky clean, then the business owner will feel comfortable setting it up.
Well, process is one thing, but I know people don't want to spend time learn about this, but I see this as opportunity when you're making business decisions, longer term or shorter term, and a cost where you're going to put money in a new investment. If they knew that there's an option that they could put some money away without getting a tax on it, you can make much better business decisions when you're trying to plan a business. I mean, if that opens up so many different avenues when you're making decisions on a business.
Yeah, and the thing with business owners, unfortunately, is because they love their business and they're good at it, those that succeed, they think that that's the only stock they should be investing in. They don't diversify. And the golden rule in finance is diversification.
Yeah.
Right? So they say, no, I'm earning 50% return on my money by reinvesting in my own business. So why would I go and buy shares of other companies on the stock market or private deals? Like, why would I do that? I get such a high rate of return with my own business. That's the best place for my money. The problem with that is that it's a highly, highly risky strategy because you really got a portfolio with one stock in it, your own company.
Yeah.
And anybody would tell you that this is actually crazy.
Too risky.
Well, yeah, because what happens if you get sick and you can't run the business? What happens if COVID destroys it, like all those tourism and companies, right? Those people have lost everything. They can't turn to a PPP and say, hey, I want $169,000 a year pension because they never set one up.
Yeah.
They're on their own with nothing.
Which people, nobody expected what's going to happen with the COVID, but people knew more about it. They will probably invest more money into plans like yours, and be a little bit more safer that way. But we learned so much during this COVID stuff. So hopefully, that will waken up people and start planning some other stuff in the future.
Yeah, and COVID is just the tip of the iceberg because I think we're going to have a lot of climate change issues. We're going to have a lot of instability. People around the world will not be able to stay where they were born, and they will have to emigrate. And so places like Canada will be, places where a lot of immigration happens. And if the local population isn't ready for that level of immigration, it's going to create a lot of social strife and violence. And so COVID and the risks with COVID are only one of many risks. It's not the only thing that we'll face in the future. So why not diversify and put some money away in a safe PPP so that you got something to rely on should another disaster hit?
Yeah. Oh, at least lower the tax bracket.
Oh, at a minimum.
At minimum, yeah.
Creditor protected too, right?
Yeah.
So the creditor protection protects the pension plan.
Good stuff. Well, I learned so much from our discussion, JP. So we send out email on these videos, once a week. So whenever we send this email out, we normally include contact information. What do you want me to include? Your website on it, or do you want me to just put your email? What contact information do you want us to include when we send out these newsletters?
Yeah, I think the website and my email address would be great, and then we'll connect these people to salespeople, or sometimes I will contact them directly.
Okay, good stuff. Well, thank you so much for your time. I learned. I hope people who are watching it, they learned about PPP plans, and I strongly recommend business owners who at least give you a call, talk to you, and understand and lower their risk. That's what it comes down to for a business leader. You got to lower your risk financially. It's just not it doesn't make financial sense for people to take a risk and lower your tax bracket. Just put some money in a PPP plan. So for something happens in a business, right? So good. So thank you so much for your time, JP. A pleasure talking to you. I really enjoyed our discussion.
Oh, thanks for having me on your show.
Okay, thank you. Yeah, we'll talk.
You're me?